If you had bought some SafeMoon tokens when it launched, you could have made a nice profit. But this is nothing compared to what I'm about to tell you. What if you created your own SafeMoon token? You could probably make a few $1,000,000 at least, and I'm being very conservative. In this video, I'm going to explain what is SafeMoon and how you can make a lot of money by forking the token. If you are new here, I'm Julian, and on Eat the Blocks, I teach blockchain development. SafeMoon is a new token that was launched on the Binance Smart Chain a few months ago. Its price went up like crazy, it was hyped by a few celebrities, and is currently the coin the most mentioned on CoinMarketCap, even in front of Bitcoin. Let's give some numbers. It has a market cap of $3 billion, which isn't much compared to the biggest coins, but compared to other tokens, it's quite good, especially considering how recent it is. For example, the token of Uniswap, which is one of the biggest projects on Ethereum, has a market cap of 13 billion. SafeMoon has a total supply of 1,000 trillion token, that's 1 million of billion token. It's pretty unusual to see such a huge total supply. The advantage of a big supply is to have a very low token price. This is a psychological trick to make investors believe that the token is very cheap, which will create some buying pressure and support the price of the token. Out of this 1,000 trillions of total supply, the circulating supply is only 60%, the rest has been burned. There are about 2 million holders of the SafeMoon token, which is very large. Generally, you want the token to be held by as many addresses as possible because it reduces the centralization risk. This is confirmed when you look at the holding of the largest whale of SafeMoon, who only owns 2.7% of the SafeMoon tokens. As a comparison, for Dogecoin, the biggest whale owns 50% of the coin. SafeMoon has a public team, which in general is better than anonymous team because it keeps people accountable. The CEO of the project, John Caroni, used to work for the US Department of Defense, and the CTO, Thomas Smith, has a long experience as a software developer. Before SafeMoon, the CEO and the CTO co-founded a game studio. It's always very positive when the team already worked together in the past because it reduces the risk that they will have some internal problem. In total, there are 6 people in the founding team, and we saw them regularly in AMA videos they release on their YouTube channel. SafeMoon is an ERC-20 token on the Binance Smart Chain. You can hold and transfer tokens like for any other ERC-20 tokens. The smart contract has been audited by a security auditing firm called Certic, and they gave it a score of 80/100, which placed it 68 out of 325 tokens that were audited by Certic. What makes SafeMoon really special is the transfer fee system. Every time you transfer SafeMoon token, you will be charged a 10% fees. Yes, 10%, you heard me correctly. Half of this will be redistributed to the current holders of SafeMoon proportionally to their holding. For example, if you are a big whale who owns 50% of all SafeMoon tokens, you will get half of this 10% transaction fee. The other half of the transaction fee is going to be used for providing liquidity on PancakeSwap, which is the biggest DEX on the Binance Smart Chain. The team of SafeMoon described this as a token burn, but it's not correct to say that. When you provide liquidity on PancakeSwap, you need to provide the 2 assets of the liquidity pool in equal quantity. The liquidity pool for SafeMoon is composed of the SafeMoon token itself and BNB tokens. Out of the 5% transaction fee used for topping up the liquidity pool, 2.5% will be sold against BNB, and the remaining 2.5% will be kept in SafeMoon tokens and added to the liquidity pool. So no tokens are burned in the process. When you analyze the effect of the transaction fees at a high level, you will realize that it incentivizes holding the token and de-incentivizes selling the token. In the end, this transfer fee will support the price of SafeMoon. On top of it, the team of SafeMoon regularly does token burn that are taken out of the devs fund allocation. They already burned almost 40% of the total supply of SafeMoon, which is absolutely enormous. These token burns are supposed to support the price of SafeMoon, but if you analyze token burns done by other coins, it's really unclear whether or not it's really effective. To me, the transfer fees mechanism is much more interesting than the manual token burns. If you do some research on SafeMoon, you will find that it has been accused of being a Ponzi scheme. This is completely inaccurate, and SafeMoon is not a Ponzi scheme. In a Ponzi scheme, you have a pyramid where people at the top of the pyramid, the first investors, benefit from people lower in the pyramid, the new investors. You need new investors all the time for the earlier investors to make money. Critics of SafeMoon claims that SafeMoon is a Ponzi scheme because with the transfer fee mechanism, new investors finance old investors. This is a simplistic argument. Yes, new investors finance old investors with the transfer fee mechanism, but contrary to Ponzi schemes, new investors are not limited by the fact that they are new investors. In a Ponzi schemes, if you are a new investor, you will always make less money than the investor that got in before you and are higher up in the pyramid. But with SafeMoon, nobody stops new investors to buy a large share of SafeMoon tokens, which will make them entitled to receive a larger share of the transfer fees compared to smaller investors, including earlier investors. There is also another argument to justify that SafeMoon is a Ponzi. The argument said that all investors who bought the token at a cheaper price before will make more money than the new investors who bought at a higher price later. But it doesn't make any sense at all, because in this case, any asset class is a Ponzi scheme. If you bought some Apple stocks 10 years ago, you are better off than investor who bought Apple stock this year. Same for commodity, real estate, everything. And finally, a Ponzi scheme usually promises you high returns, but SafeMoon does not make any promise at all. Let's be serious here. Everybody has the right to be bullish or bearish for the price of the SafeMoon token. But to call it a Ponzi is just inaccurate. Another criticism of SafeMoon is that in a transfer fee mechanism, half of the fees are used to create LP token, and these LP tokens are controlled by the team of SafeMoon. This means that they could decide at any time to withdraw this liquidity, cash in their SafeMoon tokens, which would cause a big drop in the price of SafeMoon. That's what we call a rug pull. This is a very valid criticism, and it's one of the weaknesses of the design of SafeMoon. Now that you understand what is SafeMoon and how it works, the next step is how we can fork it to create your own token. The first step is to fork the code of the SafeMoon token. For that, you will need to clone the code which is on GitHub, customize the parameters, and deploy it to the Binance Smart Chain. The code of SafeMoon is a bit more advanced than most other tokens, especially when it comes to the transfer function, and you need to understand the code if you want to be able to fork the token. In this video, we don't have enough time to explain all of that, but that's something that I will cover in my live training on forking SafeMoon, and I will mention this in more details at the end of the video. The next step is to distribute the token. You could do an ICO, short for initial coin offering. With an ICO, you sell the tokens against some crypto like Ether or some stable coins. In 2017, during the previous crypto bull market, it was relatively easy to do an ICO. There were tons of blockchain projects that raised millions, even tens of millions in a very short amount of time by using the ICO mechanism. Unfortunately, there has been a lot of scams, a lot of bullshit projects, and that's why governments had to step in and put some strict regulations on ICO. In the US, the SEC, which is one of the top regulators for financial markets, declared that ICO were illegal because it was considered an unregistered sale of security. The SEC sued a couple of projects which did ICOs. A lot of other countries follow in the footsteps of the SEC, and as a result, the ICO market pretty much stopped. In 2021, there are still some projects which do ICOs, and they make sure to block investors from the US and a couple of risky countries from a regulatory perspective, but still that's risky, and that's why I really don't recommend to do an ICO to distribute your tokens. Another alternative would be to do an airdrop where you give away the tokens for free. Airdrops are legal, but you have to be careful because if you don't do your airdrop properly, it could be considered as a hidden ICO by the SEC, which is illegal. Another way to distribute the tokens is with an IDO or initial DEX offering, and you can even combine an airdrop with an IDO. And I will talk more about token distribution, IDO, and airdrops in my upcoming live training on forking SafeMoon. More on this later in this video. Once you have deployed your token, how do you actually make money? We said just before that you shouldn't do an ICO. Instead, I suggested doing an airdrop and an IDO. But you don't make any money with airdrops and IDOs, at least not directly. Since you are the one creating the token, you can decide the initial allocation. For example, you could decide to only distribute half of the tokens to the public and keep the other half for yourself. After you distribute half of the token, you work hard to support the price, and little by little you sell your own allocation of tokens on the liquidity pool of the token on PancakeSwap or any other DEX. For example, currently the market cap of SafeMoon is 3 billion. If you own half of the tokens, you do the math, that's a really nice profit. Of course, it's not so simple because if you were to sell half of the token at once, you would crash the market and you probably don't want to do this. But there are ways to avoid that. There are still many other things you need to do if you want to fork SafeMoon. And that's why I'm going to do a live training on how to fork SafeMoon next week on May 25th. This will be a 1-hour live training where I'm going to give you the step-by-step instructions to fork SafeMoon and create your own token. I will explain the code of SafeMoon in details, including the transfer fee mechanism. I will explain how to customize the parameters of SafeMoon, and I will also do a live deployment on the main chain of Binance Smart Chain. I will explain how to do the initial distribution of tokens with an airdrop and IDO. And at the end, there will be a Q&A where you can ask me any question you want. And after that, you will have access to the private chat of Eat the Blocks where you can ask questions even after the live event. If you want to book your seat or check out the content of the live training, I put the link in the description. If you cannot make it on May 25th for the live training, you can still take the training after because I will upload a recording. And if you have any question on the live training, you can ask me in the comments down below or send me an email. I put my email at the bottom of the description. That's it for this video on Forking SafeMoon. Have a great day.